All right, let's take a look at the day's bias. It's not hard to tell that everything is under the 200 moving average on all my time charts, okay? The 10,000 tick is what I like to pay attention to the most. It's like the 15-minute chart. If you want to use 10-minute charts, great. But right now, we have everything under the 200 moving average. Everything is looking bearish, right? So this is what our immediate bias is, but we have to also go to the daily chart, right? We also want to look at the weekly chart just real quickly, quick glance. Take a look at what is going on with the levels. Here's the weekly. We see that this week, it's Friday, it's the last day, it did pop up over and it's coming back down. It didn't have enough strength and it probably won't today. I don't think that it's going to go up over the top and be all-time highs. So it's either going to continue down or probably stay in this range. That's the bias. It could be wrong. What's the daily chart look like? The daily chart shows us same thing, pintail over the top of these levels, coming down, turning red, and it did go below this level here and below yesterday's low. This white line is yesterday's low, and we can see that on the other time chart. We want to pay attention to that white line, all right, and the yellow line, which is the weekly low. Right here in all of our time charts, we know exactly where that's at. The white line and yellow line, these are the areas that it's either going to support or it's going to break down. And right now, everything is trending down. And it could get chop around this area all day long and head fake. It could do whatever it wants. It can have a clean break. It can be choppy. We don't know. What we have to do is follow the trend. And the trend right now is leading us to a very particular area of caution. Here on the 2000 tick chart, you can see it didn't want to go down yet past the weekly low. Or is that a weekly high? It's a weekly level. That's all I know. It's a weekly high. There you go. It's a weekly high. And that's a weekly high. And then this is the daily low. So it's in a very interesting area. So what we're going to do is be cautious today. Okay? Very, very cautious. And it could definitely go down. It could definitely stay sideways. I don't necessarily think, and I could be wrong, that it's going to be a strong Friday and go up over the top of those all-time highs today. Now, if I'm wrong, but I just don't think that that's going to happen. If it does, we'll see. And we need to be ready for it. If we're going to go long, if we're going to go bullish in the moving average trendline strategy, this is the absolute deepest pullback that you can have to still be long biased. And once it gets below the 200 moving average on the 15-minute or the 10,000 tick chart, once it gets below that, and we have reason to believe on higher time charts that it might continue, and all the other time charts are headed down, technically, this can be a short sell. This is actually a strong short sell, and all of these are in, well, let's look at the five. Strong sell and sell signals, right? So going long right now is not my favorite to go counter trend. I'd want to see all this price get back over the 200, at least on this particular chart here. The 10,000 tick is our central focus, and that guides our direction. And there's a point where you have to say, in all your strategies, there's a cutoff point, a demarcation line, that once price crosses the Rubicon, you have to give up your ideas, and your strategy is no longer going to work for that direction. Okay, and this is at the Rubicon for my strategy, moving average trendline strategy for the bullish side. It's breaking my Rubicon for the bullish side, meaning this is beyond the measure and levels that I like to see and try to go bullish. Once it gets over the 200, we'll talk. Once it gets over the 200 and establishes trendline breaks to the upside, like we could see a trendline break right here where price, and I've traded this before, I've seen price jump up over the top of all this and strong candle formations where I've gone long after it dipped below the 200 moving average. That happens. I'm not saying it won't. I'm saying it would have to do that before I start going long again. All right, and it looks like it wants to go. We'll keep an eye on it. All right, we'll see if it goes over the all-time highs on a Friday after coming back down. It would be interesting. The market One thing about the market is when you think you know it, you don't. All right, so that's the analysis right now. We're very cautious. If we're going to go bullish, we're waiting for price to kick back over the top of the 200 moving average, and otherwise we'll see it roll back down and test these levels again and possibly go lower. We're ready for whatever. All right, let's see what happens in the day. All right, I'm going to give it a shot. It might be wrong. We'll see what happens. It pulled back into the caution zone on the 5-minute chart, 5,000 tick chart. It looks like a strong signal. It pulled back up to the 200 into this pivot level, and it's breaking a trend line to the downside. So one thing I did not do, and I probably should have done, and might regret, is not checking the trend line break on the 2,000 tick chart and the 1,000 tick chart. I just made a video about that. So let's see what happens. My stop is going to be at the top of this pivot. I'm not going to mess around with it. If it wants to go over the top of that and keep going, then I'm just going to get out of it. We're selling, so I'll have to buy back. Buy stop at the
Order
top there.
submitted.
And a buy stop down here. We'll get a 1-to-1 on that, hopefully, Lord willing. Let's see what we got. But yeah, it could keep going. It could keep going. If it does go over the top of that, and it deserves to stop me out. But it could go over the top of that and put an extra kick in, and then roll back down and come right back down and keep coming down. I'm just saying it's a good try. I'm saying this is a good area to where, I think it's worth a try. It's hitting the 20 EMA. It's hitting the 200. It's been trending down. Yeah, I think it's worth a try. It broke the 2,000 tick trend line. It broke the 1,000 tick trend line. It's hitting some resistance. I'm going to give it a try. I'm not going to fight it all day, though. If it doesn't work on this, I'm not going to keep fighting it. I'll wait patiently for a better setup. All right, what happened? I was stopped out of the first trade. There we go, right here. That's the first trade. You can see it did come up over the top of the 200 and ticked me out and then went back down. A double top reversal. I should have waited for the second one. That can happen sometimes. And then it went right back down. So I got back in the trade. I'm going to move my stop to break even, and hopefully it will continue to go down there. So we'll see what the second trade does. Okay, I just closed my position for the short when it spiked down to the 50 EMA, and all we did was barely make a couple of ticks beyond what we lost. There's a lot to learn on this stuff, and the double bottoms where it penetrates a little lower, it stops you out and then goes in the other direction is a pretty popular way market makers and algorithms like to play. That's very tricky. Look at this on the 2,000 tick, how beautiful that head fake was to the tick you out just before going back down. So it may be that my strategy was too eager. And I was too eager to get into the trade. That I need to work on. Getting into the trade too early. Yeah, that's a problem for me. And I'm noticing that a break of the trend line retest, is a higher probability trade that I need to work on. Meaning when it breaks a trend line, let's see if it's going to retest. There's multiple ways of handling that. I could have gotten in, added to my position and let it come back down, or I could have waited for it to retest. And also I could have held longer. But at this point, I want to meditate on what went wrong, and I just want to make my money back on that trade. It's okay. We made back a little bit more than we lost, but basically break even. And I want to think about my psychology, my decision making, my choices. Why did I make the choices? What could I have done better? And this is all part of just getting better over time. So those are the first two trades. One loss, one wins. And I should remember my initial analysis on this entire thing, knowing that it's at these levels right here where the white line and yellow line are. The white line and yellow line represent the high and lows of weekly the previous day's low and a weekly high and all that. So we've got to be careful. And I know that ahead of time, so we have to be careful. I'm not going to, I'm learning all the time, guys. I don't have all the answers. I don't know what to do. I like to trade. I want to trade. I'm battling a video game mentality where I just want to always be in a trade. I'm trying to be more mature. It's the only way to make money at this, though. You can't keep playing a video game here and expect to be professional and make money. So sitting on my hands and waiting for better opportunities is the challenge, I think, for all people that want to be professional traders. But you can see in the 10,000 tick chart, that is exactly what I was thinking was going to happen. Go up to the 200, bounce off the 200, bounce off of the 20, and bounce off this pivot level. It's not as clean as you think. You see this white line? That's the previous day's low. Previous day's low. You see it, this behavior right here. Unpredictable. Doesn't know which way it wants to go yet. So you can't trade that. And I'm in trying to take a trade right next to that in an area that's very, very close in proximity to that area. So I'm not going to take any more trades right now in this area at this time. Oh, I just realized what a big mistake that could have been. I'm trying to short this off of these moving averages, which is a great idea normally. And the whole confluence of the pivot, the 20, and the 200 all work together to push that down. But it's pinched and sandwiched and pressured in between the previous day's low and a weekly high. It's a weekly high and the previous day's low. And I've learned this time and time again, that when price is squeezed and pinched in between things, such as a great sell signal and a support level, not to take the trade. And it doesn't matter which way's right and which way will win. There's going to be one way that's going to win this. Eventually, one side's going to dominate. And but until it breaks these levels, it can seriously chop and fake and stop you out many times over. Unless we are 100% fully persuaded that this is going down, and I'm not that persuaded, my stop would be above this pivot here, and I'll just let it chop around and do whatever it wants because I'm convinced that it's going to go lower, but I'm not convinced. Or we could put our stop quite a ways down here and say I'm convinced that it's going to go longer and that I'm just going to let it chop around whatever it wants. I'm going to get long, and I'm just going to wait and put my stop down at a reasonable level. There's a sweep area down here that it can go to. Anytime you see one of these dashed lines here, it's liquidity level sweeps on the chart. And there's a lot of them in this area actually that it could just jump down and, grab real quick before going up. So we always have to keep that in mind as well. I'm not going to take a trade because I'm not convinced on either direction on this. I don't know where it's going to go. I'm going to wait until it proves it to. Okay, let's analyze. We have to exercise our skills of perception on what's going on. Look at the hourly chart. This is the MNQ micro contract. It's pulling back to 50%. It literally bounced on the 50% pullback of this high right on the tick almost. And there's a 20 EMA, I'm sorry, the 50 EMA right there. So this is an area that it could most definitely, bounce off of. I'm not seeing that you can't be fully persuaded to go short. You just can't. In fact, I can see a lot of reason why go long on that, to be honest. But, Fibonacci's and moving averages are broken all the time. When the price is ready to do something, it doesn't matter what Fibonacci says or what moving average say. It can continue to go down. The best we can do is gather as much information as we can to make a solid, educated guess about what we think is going to happen. See, now it's back in between previous day's high or low, previous day's low and last week's high. Right back in that range again. Went right back up to where we shorted a couple of times. And this is a very bearish. This is very bearish behavior. Okay. It can't get over the 200 on the 10,000 tick. And it's right back down. So if it breaks this pivot down here, I think that we should look for some shorts, but it's going to have to go beyond this pivot and hold. Because all it's done is gotten to this weekly high level and came right back up over the top. Right? So there's no way we can be confident to short right now, and there's no way we can be confident to go long right now either. Okay, on my third trade, what I did was I went ahead and took a trend line break right here, and I was planning on playing the range and choppy range, and it went up. So I just got out quickly. I didn't think it was going to go up that high, so I just took whatever little profits I could get. I accidentally bought another one, and I was long too, and when I did that accident, it threw my mind off, and I just closed because I didn't when you make an accident like that, you're kind of like shocked. So I closed it. It was a win, but there was quite a few blunders involved with that. All right, let's take a look at what's transpiring. It is back up over the top of all the moving averages. The moving averages have not crossed over one another on here, but it's trying to break over the trend line. This is a nice strong move. I'll be happier if price gets over the 200 on all these. And it's above the 200 on the 1,000, 2,000. It's not above the 200 on the 5,000. So when you get harmony of all these, it seems to be more reliable. Because right now it could definitely come back and drop. If you were only looking at the 5,000, you're thinking, oh, okay, this is just going back up into a descending, 200 moving averages. When all these time charts agree in a direction, that is what I'm looking for. I could chase this move and buy over the break line here and just trust that it's going to eventually cross over and trust that it's eventually going to keep going. But depending on your strategy, depending on what you've learned over failing so many times, for me, it's not necessarily a short either. If I was going to go in either direction, I probably would be more biased to shorting because it is hitting this downtrending. You would think that I'm looking for a buy on a trend line break, but really I'm looking for a head fake in this case. Yeah, so you got to be very, very careful. Everything's got to line up perfectly, and you got to make sure you know what you're looking for, and that takes time and practice. You can't just do it overnight. And speaking of shorting, I guess making the video about it, I didn't really take it serious, and it looks like that's exactly what's happening here. And why? Why did I think that? What has me thinking it's not a good buy yet? What would make a person think that? And like I said, using multiple time charts and getting them all to agree is the number one thing I'm looking for. It could still go up, however. It has to prove it to me more. It has the 20 has to get over the 50. Price has to stay above the 200 and let that rotate up. Price has to get above the 200 here on the 5,000 tick. And then we're going to be in business for going long. And you just wait for a pullback in that situation. Now let's take a look at what looks good. It looks good on the 1,000 tick chart, meaning it's above all the moving averages. They're all trending up, right? It's starting to create a trend line bounce. If I was only using this one chart, I would say, yeah, let's try it. But when we look at the others, we see that it's pinched below. It's struggling here. It could go up. I'm not saying it won't, but it's not ready. You see, it's climbing. It looks like it wants to climb. It's starting to climb here, but it's not ready. Look what it looks like here. It's trying. It fell right back down in the middle of all that. It's got to prove it. This is what I'm saying. If these moving averages on all time charts are not flowing clearly in one direction or another, it can chop around a lot. And you see what I'm saying? It starts off looking extremely bullish on that candle, and then bam, slams back down in your face right here. Just knowing that that's a possibility can save us from so many losses. Just knowing the possibility is stronger when the time charts do not have harmony. The possibility for failure is stronger. All right, I'm going to try one of my techniques here in just a minute. I'm pretty convinced it's going to be choppy for a while here. So I'm going to wait for it to pull back to these areas and try to go long. I don't think it's going to sell off dramatically and fast. And if it does, we'll have our risk management in place. This is not a moving average trendline strategy. I'm supposed to only be doing that for the month of March, but I am trying to learn so many different strategies. It is a weakness where I have not really made my mind up which strategy I want to take. I want to be a multi-strategy person, to be honest with you. I don't want to just use one strategy, and that could be a flaw. All right, so next time it comes down to this rotation right here, what we're going to do is buy. I'm not going to short the market because I feel like if it's going to go quickly in any direction, it's probably going to be up, but that could be wrong as well. But I'm going to try to buy next time it comes down into the support. This whole area right here looks like it's going to be choppy for at least today and maybe until the afternoon. I was just about to hit the buy button right here and before I started recording this video section. So let's be patient and see what happens. Okay, I waited patiently for it to come down to me. I got triggered in right here. I'm interested in adding up to 10 contracts, which is really just one E-mini. But if it goes up for $20 real quick or something, I'll take it. And just to make it come to me first. That's what my plan is right now. This is not a moving average trendline strategy. It's basically a support resistance by choppy market strategy. And we have to know what our daily limit is. The daily limit on this maximum is $400, but I don't really want to lose more than $100. So I'm going to play like my maximum risk limit is $100. Although in the biggest picture of everything, I have that $400 max limit. You never want to hit your max limit, guys. You never really want to hit your max limit ever. So keep that in mind. Always try to get out before you hit your max limit. Because if we hit our max limit, then we probably missed a couple of opportunities to take profits or to get out a little bit earlier. And we don't want to do that. We want to be really, really, really precise about that stuff. Okay, if it gets near $20, I'm going to start to put my stop loss in here.
Order submitted.
I'm already at break even +1. It made a higher high here. It closed above the 20 EMA, so I'm going to see if it's ready to rotate up. And if it comes back down and stops me out, I'm already break even +1, so it's not a loss. And I'm just going to try to take, $20 at a time, $50 at a time, and that'll actually give me a cushion. And this is just because I really want to trade. I could wait for the moving average trendline strategy, but you may not get a trade in that day, and that's fine. If you're sticking to one strategy, you have to stick to that strategy rules. And this is one of the reasons why I like to trade multiple strategies. If it breaks right here, and if
Order filled.
okay, I got stopped out for 1 tick plus, and so I think it's probably going to keep going down, which will give us a better buying opportunity down here at the dash line. Did it sweep that liquidity? No, this is the new liquidity. Okay, so yeah, it could. I still think it's going to chop around, but it may be going into this zone down here first and chop around. I'm not so sure if it's going to do a quick break through all of that and keep going. It might. So I want to be very careful. I'm going to give it another shot right here. It's right at the weekly high where it's bounced a couple times. It doesn't mean it's not going to go down lower. It doesn't mean it's not going to break these pivots. It's just an area that I want to have my first entrance and see what happens here. One micro contract only with the goal of adding up to 10 with a max loss $400 daily limit and an early exit of $100 loss early. Okay, it came up and took me out right at the 20 EMA, which is an area that if it's going to keep rolling off of, that's a target for profits. So right there, take that profit right there, buy it right off this line. And if you do this over and over, you'll be building up your cushion for the day. If you feel like you have to trade, make sure the market is pretty guaranteed to go sideways. There's no guarantee. I'm just saying it looks sideways. And when you get to the lows, this is where you want to just barely enter in case it goes against you. You just barely enter in and you take small profits. You don't go maximum size in because if it goes against you, you can't add and try to scale out and protect yourself that way. Staying small. If you have to have a trade, if you have to trade the market that's choppy, that's the way to do it. If you have to, buying at the very low. I put my price in. This first one anyway, I put my price in and let it come to me. Okay, I let it come to me, and then I got out as soon as it was profitable. It looked a little like it was going to. When it rolled off of that, I said, okay, it's probably going to use that as resistance, and that's a good target. I should have took profits on it. So when it rolled off of the 20 EMA on the 1,000 tick chart, I had my stop in place. Okay, I got in at the previous week's high and we took profits at the 20 EMA, right? So let's see what's going to happen. I don't know if I'm going to take any more trades. This is just one way of trading, and it's still before lunch, so we'll see what happens. All right, we had a couple small scalpy wins here, but you should have seen the way this came down very, very fast. And overall, it's making lower highs here, and it's getting less and less um, you know, for me, attractive. And look at this on the 2000 tick chart. Really looks like it wants to break through. Okay. When it bounced up here and made a higher high in this area, I was in all throughout this area. I was willing, but then now it's continuously making lower and lower highs. So that's a different situation. It's turned into and developed into more bearish bias. So I won't be scalping here at the bottom, even though it may be actually a good thing to do. Well, it took off on me. And so it's not surprising. I mean, I never claimed to exactly know where it's going. Would have been a great buy. I did two here. And then just, I don't know, the way this came down right here was just unbelievably fast. And I just got spooked. And, well, we're still waiting for we're in the same situation we've been in all day. Price is not closed above the 200 and all the moving averages following with it. This part right here was a fake breakout. What makes me think that now's a good time to jump in it? It's just not. It's not a good time. Price has already tried to get over the 200 on the 2000 tick chart here and failed, and I'm not convinced. The moving averages are even farther under than they were over here. So it's a no trade zone or a different strategy zone. Or the trend line break moving average strategy seems to be right now. There are times when your strategy just simply has to be put on hold. All right, we have some different character traits now with this jump above the 200 EMA on the 10,000 tick chart. We have a consolidation candle that popped it right through, which is an interesting sign. We had a consolidation candle right here too, though, but this is a much bigger break over this trend line, and it made higher lows, so that's significant. If we were going to go long, we still need to see, for the moving average trend line strategy, we still need to see all the moving averages come up over the 200 on this chart here. Unless you want to get in early and take a higher chance, higher risk, it can be done with higher risk in mind. But for the lowest risk trade, we want all the moving averages to agree with one another. I almost pushed the short button here. Let's do a mental trade on it and see what would have happened. It's broken the trend line up on both the 1000 and the 2000. Plenty of room to go back down. Hitting the 200 EMA, descending down on the 5000 tick chart. It's a risky trade because taking a short, really, if you want the highest probability, you want all the moving averages and price to be under the 200, and right now it's not. So this is actually a very risky trade to take that short. So that's why I'm not taking it. I'm just gonna observe what's taking place. You know, to get perfect trade setups is very difficult. You'll have an excellent return and high win rate if you take perfect trade setups. There'll be times when I just don't take a perfect trade setup. I can show you what a perfect trade setup is, but that doesn't mean I always take perfect trade setups. So you might see me take trades that are not exactly what the strategy is looking for 100% perfectly. For more advanced, when the 200 EMA is flat and things are choppy sideways range means it can go either way. Most of the activity's been underneath the 200, and we have the moving averages going down on the 10,000, and choppy sideways, and the 200 is going down on the 5,000. Starting to look a little bullish. When you get a kick up, a short-term kick up on the lower time frames, is really, it's going to look bullish when it's time to short. It's going to look bearish when it's time to go long on the 1000 tick chart. Okay, that's just the way it is. Right here, it looked extremely bearish, but it happened to be the right time to go long on it. So it just putting all the pieces together and making a high probability trade, and also, you know, what is your target? What is your risk? If the risk is small and the target is a little bit bigger, you can take the trade even though it may continue up. However, did it hit your target? Was the idea, did the idea work? So we can measure this out right here. Say we got in right here. Stop losses up at top of that. Yes, it hit 1-to-1 right there. I guess because I didn't know if I wanted to enter a riskier trade, I chose not to take that trade. I was like, okay, you know, it looks good. It looks decent, I should say. It's not a perfect trade setup. It looks decent. but it was not perfect. Could I get 1-to-1 on it? That should have been my next question. Do I really want to take a trade just for 1-to-1? I've been scalping down here looking for 1-to-1, so I guess I'm back and forth with the idea today. Choppy markets really just kind of make you wonder, are you going to take this seriously, become a professional, or are we looking to treat this as a video game, you know? And I really, really want to go professional with this. I really do.